Hi everyone, I'm Sierra Sun, VP of Global Markets at Huobi. Thanks for joining us. As we all know, the crypto world is never closed and is always evolving. So as a result, there is constant development and the global presence expands. Like the market, Huobi continues to adjust and evolve with the exchange market and Huobi's traders. So in this episode, we're bringing a global view on Huobi's new futures options from 3 different time zones to Huobi Insider. So we have 2 very good guest speakers today. So first one is Jacob from GSR, who is the head of investment solutions at GSR and is responsible for the firm's investment management business. And we also have Joseph Edwards, who is head of research at Enigma Securities. Welcome, you guys. And why don't we just get started with some self-introductions and your guys' backgrounds.
Thank you very much for having us. I'm Jacob. I'm one of the partners at GSR, and we are a programmatic trader and market maker within the digital asset space. We've been active since 2013. We have about 50 people globally. And for the purpose of this conversation, I think it's worth mentioning that we are very active in the option space and the growth of the option space.
I'm Joseph. I'm head of research at Enigma Securities. Enigma was born in 2017. We were born out of our parent company, Macor, which is a agency brokerage in the equities and forex business in the UK. And we've been particular in 2020, we've been looking to diversify our core business, and we've been moving a lot with regards to derivatives markets. We are listed on CME as an execution agent, and very happy to be here.
Welcome, you guys. Okay, so let's get started on the questions. In recent days, Huobi announced to have launched USDT quoted options for a stable price, though most exchanges like Deribit and CME are offering BTC quoted options currently. What's your opinion on the difference between these 2 different quoted options, and based on your experiences, which will be more favored?
It's a good question. You're very right in that most of the traded options in the crypto market currently are quoted in BTC, such as they are on Deribit. I think CME options are actually quoted in US dollars as they are on the CME futures contract, the options on the CME futures contract. But as a general trader, I guess we're more used to having a stable currency as the underlying, and that's how institutions are used to quote options and trade options. There are some challenges with regards to risk management. So, for example, when you're having a very volatile quoting currency as the underlying, you need to risk manage that. So, for example, to be short to express a short position in BTC, if it's quoted in BTC, you need to own BTC. It's like part of a mix. So I think that we will see an evolution of USD and USDT quoted options becoming more prevalent in the markets.
So it's not necessarily true that USDT options will overtake BTC options because, of course, old habits die hard. It depends on the quality of offerings, depends a lot of things. But there is room to do so. And I don't think there's anything that's essentially tying people to BTC. There's nothing superior about BTC quoted options. It's simply that until recently, we didn't have either the regulatory or really the technical infrastructure.
So far, most crypto exchanges, including Huobi, are offering European options for standardization. But in traditional financial market, both European and American options are popular. What do you think of these 2 different styles? And what might be more widely applied in crypto derivatives market?
Maybe first looking at the pricing from a pricing perspective, there's no real difference between a European and American options. They will be priced similarly from a mathematical perspective, because time value of money would always advise you to hold it to maturity. Personally, I probably think we will continue to see most of the listed options be done as European, but I don't know. From a pricing perspective, that doesn't really matter to us.
Yeah, I mean, one of the things that I think is quite important to note is a lot of the real use case really in terms of trading of options or crypto markets is that, I mean, let's call it wick syndrome, right? The tendency of crypto markets, there's a massive amount of volatility, but there's a massive amount of volatility on very small timescales. We're talking about the tendency of maybe a market will, in the course of hours, minutes, go downwards to liquidate, shoot downwards, shoot upwards, liquidate positions who were short at a certain level, liquidate positions who were long at a certain level, and both sides get essentially screwed, right? American options don't solve that because, of course, they have this execution basis. European options do solve that. European options do allow you to create essentially a leverage position in which you don't have to be worried about this sort of behavior. So I think that's actually quite a large part of why everyone offers European options and why we haven't really seen a use case, as it were, for American options. And there's also some burden of execution, I think, but I think that's the main thing.
So, third question, according to last one-year data from Screw as of September 2, 2020, more and more exchanges are involved in, and Huobi also launched BTC options on September 1st, 2020. Besides, the volume is also increasing rapidly, though still far behind that in crypto futures. Is that a sign of wider acceptance of crypto options? Will this trend continue?
I feel like this has been a year of massive growth for options, and it's hard to not see further growth because I think the funny thing again, options mania, as it were, has not gotten anywhere near where it is in the crypto market. Option mania, as it were, has not got anywhere near where it is in traditional equities markets, for example. So I think there's a lot of room still to grow.
Yeah, I tend to agree, and we tend to agree as a firm. I think we will see a huge uptick in that volume, and with the entrance of more institutional capital, being able to express views through options is also very useful, both in terms of expressing risk and manage your risk. So that's one part. The other part is that the reported growth that we have seen is just it's just a baseline liquidity. The liquidity that is reported on exchanges and on venues. There are options trading between counterparties bilaterally as well, which I think amounts to a huge, to a significant amount that isn't seen in the headline figures. So we're excited to see it growing.
Currently in crypto options market, Deribit is outperforming other exchanges like CME, but according to the data from Screw, Deribit recently saw market share decrease from about 80% in Q1 to about 70% in Q3 this year, while the volume on other exchanges begin to grow. Does it indicate the competition becoming fiercer? How do you explain this phenomenon?
We will definitely see some competition in the option space, and that should be very exciting for everyone using and trading options, because hopefully, pricing and different ways of trading these will become more available.
So there's been a lot of, but that's been really the big innovation of this year is first with Deribit and other firms, we've seen essentially venues where traders can actually feel comfortable trading, they can feel like there's enough options liquidity here that we're happy with it. And so it's not going to happen overnight. Deribit won't go to 30% overnight. But there's nothing preordained, there's nothing special about Deribit which should make it the only leader in this space, right? And as other venues emerge, and as other venues show that liquidity and traders feel comfortable on them, it will eat into that Deribit dominance, like naturally.
Risk management is a major topic for options players. Huobi Options adopts a series of risk measures such as price limit, mark price based on the Bragg's growth model. The bricks are adopted as well. So how do you like such measures on Huobi? Do you think that risk management is the key for building up a successful options product in the market?
I think that options does come with risk that takes a little bit more education than other financial instruments. I would say that at a firm like GSR, we do calculate our own risk, and we have our own risk libraries that price and the price the optionality. So depending on how you're going to use these options, I think it's very important to understand the risks. Black-Scholes still is a good reference for pricing these options. What I would say is that if you're trading these options, you should be aware of what risk you're taking, and if Huobi will help provide some education on that, that's helpful.
So CME is the largest regulated exchange offering crypto options with about 9% market share so far. And previously, CME launched BTC options in 2017, the world's first entry into crypto exposure as a regulated institution. So what's institutional attitude towards derivatives markets and options now?
Options uptake since the CME edition of options has been really significant, and a lot of institutions were looking for this, right? Now, if you look at 2019 compared to 2020, the numbers overall are significantly higher. But one of the things we've been doing on the research side, we put out a weekly publication. One of the things we like to look at is the trade account on CME futures, because all traders above a certain size have to report their positions to the CFTC in the US. And there's a weekly snapshot published that includes usual things, volumes, open interest, this sort of thing. But also how many of these traders, obviously by institution, are currently holding positions. Now, last year, there were on average 45. The average so far this year is 63, and it was 85 in the previous report. But we can see, but in addition to that, we can see there's a couple of pivot points where a lot of traders have emerged, and these two pivot points were start of January and start of August. They're not taking huge positions from what we can derive from the data. They're taking relatively small positions. They're getting comfortable, but they are getting involved in this market. And right now, this is one of these nice little sound bites. There are roughly as many reportable traders trading BTC on the CME at any one time as the Dow Jones Index or the Canadian dollar. So it's a very good sign in that regard.
Okay, so in traditional finance markets, options volume is far behind that of futures. So compared to traditional options market, in what stage has the options in crypto been so far? And what are the problems that's to be solved before it can be more widely accepted and more popular? And what problems do you think need to be solved, and what need to be done to help improve crypto options liquidity?
We're obviously in the very early ice age of the options market for digital assets, and I can't see them do anything but grow. If we're looking at compared to traditional market, they're they are infinitely small in digital assets as a market. And I think options require a higher degree of enterprise infrastructure to be able to handle than just pure spot trading, for example. The second thing is that I think we need education for the market. We need to understand what these instruments are good for. How can they earn us extra yield? How can it help us with our exposure? How can it help us with our risk management? And I think that will bring a lot of new participant in the option space. Further as anything else within the institutional space, a clear regulatory framework is obviously important. That every time you trade, you want to feel that your operational risk is as small as possible, because what you really want to express is market risk.
I guess the two watchwords I'd use would be liquidity, because obviously these are complex. I mean, this is part of what we do at Enigma with regards to working with CME clients. The execution of that is difficult. You need a lot of liquidity in the markets to do so, and familiarity. Again, it should be emphasized we're very, very early on right now. Well, maybe not as early on as you might think in some respects, but again, an interesting fact is if you look at, going back to these CFTC figures, you look at most markets, apart from essentially S&P futures, most of the futures traded on the CME, about 15% of our open interest is on options. It's 6% on BTC. So obviously that's in the context of also clearly BTC futures have a long way to grow on those markets as well. So we're a little bit further along than you might think in some respects, but for the most part, yeah, very, very nascent. And liquidity and familiarity, that will just take time.
Yeah, so speaking of methods that can help attract more institutional traders, there are a few things that we're trying out too. So options market maker fee rebating become a way for exchanges to improve liquidity. So for example, in our recent new launch BTC USDT options, Huobi rebates its market maker's fee commission as high as 0.003 USDT per contract. Do you think such method can really help attract more liquidity and more institutional traders?
Having low fees and having rebates for trading is always a net positive for someone to provide liquidity. At the end of the day, providing liquidity, you're hoping to earn the spread, and if you receive a rebate for the spread, everything else equal, your probability of making money goes up. So I certainly think that. That would be a advisable route to go. Everything else equal, if it's cost less, it's sort of favorable.
Yeah, I mean, this is the thing you have to also always bear in mind. Liquidity providers are still trying to find out which venues work the best for them. The customers and the market makers you're having on these platforms are extremely price sensitive. So there will be a race to efficiency here. So anybody who can offer rebate, like low fees, rebates, incentives in this way, has an opportunity to really grab a large part of the market here.
You should also think about, so fees is one part of the puzzle, but market making options means that you need to be able to create equivalent surfaces between different expiries, and it's a higher dimensionality problem than spot market making. So I think that it's a great way to offer incentives for market makers, but working with them to ensure that the technology is there, and also to create the right incentives for the other side and the takers.
Great. Thank you everyone for your time, and I really enjoyed talking to you guys.
Thank you for having us.
Thanks for watching. This is what Huobi Insider is all about. Sharing knowledge from industry professionals direct with you. Join us next time on Huobi Insider.